Speaking at the BoG's maiden meeting with heads of various commercial banks in Accra, Dr. Isiama highlighted the impact the increase in the policy rate will have on businesses and households and urged the banks to support struggling sectors with targeted financial support.
Private sector credit and broad money supply expanding, demand-side pressures could re-emerge without continued vigilance. The committee therefore adopted a proactive stance guided by recent experience that delayed tightening can result in more persistent inflation and costlier adjustments. The policy rate increase also strengthens external buffers. It supports the cedi and signals our commitment to macroeconomic stability at a time of heightened global uncertainty. Colleagues, we also recognize that the policy rate hike will affect borrowing costs for businesses and households. While the policy tightening will affect funding costs and credit pricing in the near term, the financial system is well positioned to absorb these effects. We therefore want to urge banks to exercise prudence in adjusting lending rates and maintain transparent communication with your clients. Viable businesses should continue to receive support, and tailored solutions should be explored to mitigate the impact on the most vulnerable sectors.
Despite recent challenges, Dr. Johnson Isiama expressed cautious optimism about the state of the banking sector. He noted that even in the absence of relief measures, the sector has shown sustained improvement driven by gains in solvency, asset quality, liquidity, and profitability. He also announced plans to enhance the central bank's supervisory and crisis resolution tools.
Lessons from past bank resolutions continue to shape our crisis preparedness. We are refining our supervisory and resolution tools, including work to strengthen recovery planning and introduce a resolvability assessment framework. These are to ensure that banks are both well capitalized and resolvable in distress, especially in an increasingly interconnected system. Colleagues, as we deepen reforms and reposition the financial sector for the future, it is equally important to reflect on how banks can do more to drive Ghana's economic transformation. Colleagues, one critical area is trade facilitation and regional integration. We expect stronger support, especially from the foreign-owned banks, in terms of trade financing, cross-border payment infrastructure, but also platforms like the PAPs that have become available in recent times.